Dalal Street snaps its 8-day losing streak to end the day's high. The Nifty ends above the 24,800 mark, led by banking and auto stocks. The Nifty Bank outperforms the blue chips.
RBI keeps the policy rate unchanged, waiting for greater clarity from upcoming data, but sees inflation easing even as growth perks up but remains below target. The ECL framework for banks and capital adequacy requirements as per Basel III will both kick in from April 1st, 2027, thus allowing banks more time to adjust.
Select pharma stocks perk up in trade as the Trump administration strikes a deal with Pfizer. Now, under this deal, the drug maker will lower the prescription drug prices in the Medicaid program. Analysts read this agreement as a positive for Sun Pharma.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Sonal Bhutra and with me is my colleague Hormis Patakia. Hey Hormis, tomorrow is the holiday but we have a lot to watch out for Friday's trading session. And what a stellar rally today.
Finally, a day you can call that belonged to the benchmark indices, and it was the credit to the Nifty Bank that led this up move. An 8-day losing streak coming to an end. The Nifty Bank 700 points higher today, leading the charge and taking the Nifty higher with it as well, and as a result of which it had an impact on a lot of the index movers as well. The 24,850, the important level where the Nifty has closed at. We go into a holiday tomorrow. Of course, we need to keep in mind the fact that we started off the series with record FII shorts. So there's some bit of short covering also coming into play today.
Oh yes, it did. But you know, there have been a lot of stocks on our radar today. So let's get across to the first segment of the day. Vivek is joining us now from the big wall with the top movers and shakers of the day. Vivek.
Well, thank you so much for that. A day where you won't complain at all, given the kind of green that you see on the screen throughout the trading session, especially the kind of rally that we saw in financials post the RBI policy outcome. It was the private banks that led the rally. Kotak Mahindra Bank almost 3.5% higher. Axis, ICICI, HDFC, all of these stocks supported the up move as far as the Nifty Bank was concerned. Along with that, the overnight deal that was announced by Pfizer was something that led to quite a bit of a relief rally as far as the entire pharma pack was concerned. Remember, a few Indian companies supply to Pfizer. Not only that, there was the overhang of drugs coming under the Medicare basket as well. These concerns dissipated overnight. The entire pharma pack saw a bit of relief rally. Piramal, Laurus, all of these stocks significantly higher in the session today. The NBFC pack rallied, especially after the RBI policy. Look at Aditya Birla Capital, 2.5% higher. Samman Capital, this stellar rally that the stock seeing continues. Shriram, L&T Finance, all of these stocks higher anywhere between 2.5% to 6% today. Within the broad end of the markets, our media stock, one that doesn't move too often, that was significantly, one was Sun TV. When you look at this particular name, it was the rub off of all of the news flow that you're seeing across value unlocking as far as the IPL franchises are concerned, higher by 15%, very strong volumes. And Tata Motors, good numbers, but there was a significant catch-up rally that this particular name saw. Relief rally seen, some positive news flow coming in as far as the JLR are concerned. Negative stocks, very few and far between. One stock from the broad end of the markets that stood out was Delivery, over 3.5% in this particular name. OMCs today saw a bit of selling pressure, HPCL down over 2%, and NLC India, Select Utilities, NLC, one of the top laggards as far as the broad end of markets, NSE 500, one of the top laggards today.
Vivek, thank you for taking us through the top movers of the day. We are now being joined by Sudeep Bandopadhyay, the Group Chairman at IndiTrade Capital, and Ruchit Jain of Motilal Oswal Financial Services. Ruchit, to you first. Despite this move that we have had today, you still use this as a bounce to cut out your positions on the index? Or do you believe that this has still more legs to go once we resume on Friday?
Yeah, hi, very good afternoon. Well, if you go by the data, then we believe that post the recent correction, the risk-reward ratio has in fact turned favorable to create fresh longs. Primarily, if you look at last 9 trading sessions, markets had ended on a negative note, which had led to quite oversold momentum readings. And historically, there have been such 4 to 5 occasions where on consecutive 9 sessions, markets ended in the red. But after then, for next 5 or 6 trading sessions, we have seen a good positivity because of the oversold setups. Secondly, if you're also combining with the the rollover that we have seen yesterday, FIs have long short ratio only of about 5 to 6%, which means that almost 94% positions are there on the short side. So this leaves very less room to create more shorts. So in absence of that room to create more shorts is less. So, and the momentum readings are old, so markets have already corrected. 24,400 we have seen in last couple of months have acted as a good support. So the risk reward ratio, I think, is favorable for an up move over here. So a relief rally definitely, but we believe that this could extend towards 25,200, 25,250 in the short term.
We take that point, and Sudeep, we'll just come to you in a bit, but because we want to understand what transpired at RBI's policy meet today, because the Monetary Policy Committee left key policy rates unchanged as expected. The forecast for GDP growth was hiked by 30 basis points to 6.8% for this fiscal. The inflation forecast was cut by 50 basis points to 2.6%. But what stole the limelight were a slew of measures by the central bank to shore up lending. A total of more than 20 measures have been announced. Ritu Singh is here with the key highlights. Ritu?
Well, yes, the Reserve Bank of India has unveiled sweeping, reforms across the banking sector, measures that will reshape credit flow, boost competitiveness, and open new avenues of growth, especially for banks. First up, the expected credit loss framework. It's not going to bite immediately. Implementation only starts from April of 2027, with banks getting time until 2031 to fully absorb the higher provisioning impact. Basel III capital adequacy guidelines are going to kick in from 2027 as well. Alongside, draft norms on credit risk propose, lower risk weights for MSMEs and home loans. That again is going to make capital requirement for banks lower. Now, in another huge relief, RBI has scrapped its earlier draft on business overlaps between banks and their group entities, leaving that call to individual bank boards. This is especially important for lenders with multiple subsidiaries like HDFC Bank and ICICI Bank. But perhaps the most striking shift of all of these has been that banks can now finally finance mergers and acquisitions, which is a complete U-turn from earlier RBI regulations. This has, of course, been a long-standing demand from banks, and it will now let them enter the M&A space, an area which had increasingly been dominated by private credit. So expect more buyouts and consolidation deals as well. Now, capital market rules are being eased for bank lending as well. There's going to be no ceiling anymore on lending against debt securities. Banks can lend against shares, REITs, InvITs. The limit on loan against shares has been raised fivefold from 20 lakh rupees all the way to 1 crore rupees. And similarly, IPO funding limits per person have been bumped up from 10 lakh rupees to 25 lakh rupees. Now, for large borrowers, there's huge relief. The 2016 rules that discouraged bank lending to corporates that had more than 10,000 crores in bank loans, that is gone. This marks a significant shift. The large exposure framework, though, for individual bank-level risk management remains, but the system-level concentration risk is now going to be managed through separate tools that are yet to be announced. Now, for infrastructure, again, risk weights for NBFC lending to operational and high-quality projects is going to be cut down. That will again bring down the financing cost for them. And finally, deposit insurance premiums are going to turn risk-based. That means banks with better rating pay less, the riskier ones pay more. So this is some sort of an incentive for better governance as well. So overall, big bang reforms, more than 20 announced in this policy with some far-reaching consequences.
Far-reaching consequences indeed, and it shows with the number of announcements that were made. Ritu, thank you for that. Sudeep, much needed for the banking sector, especially considering there were some concerns in the previous quarter with regards to pressure on their margins, their asset quality and so on?
Absolutely. I think some of the measures, Harmaz, if you look at it, they were long-standing demand, and these were the regulations were framed many years back when the world was different, the volume of credit was different, the transaction used to happen in a different manner. Look at M&A. I think there is more rationale for not letting banks to participate, and because of that, all corporates were using foreign sources or private credit for M&A. I mean, banks were denied this opportunity of credit growth. Similarly, look at IPO funding, and also look at lending against shares. I think these limits were set long back, and they warranted an increase. I'll also mention one point that, look, the government, SEBI, RBI, all of them are worried about FNO, particularly unbridled speculation and speculative position taking through FNO. Now, that can be countered by facilitating delivery-based buying, which can be done if you lend more against stocks. I think that's another way of helping the cause.
Take that point, Sudeep. In fact, banking experts feel banks need to understand the nature of high financing business and that this can be a big opportunity for Indian banks. Listen into some of the experts we spoke to as well.
This is a high financing business, and that is what our banks will need to understand. The problem really is, are we going to be able to price this credit right? And that is where I think the expertise of a banker will come into play, because this is normally 15 to 18% related financing activity, which our banks are not used to because of the kind of credit we get. So I think if you're able to finance it right, this is a great opportunity for Indian banks. So I think credit growth will depend on the optimism that is there in India, first of all. So if a Chinese manufacturing is preferred, then the Chinese manufacturer shall manufacture and India shall not build capacity. But I think if we have the ability of opening things out, what the governor has done now is to say finance is available. Now we have to make projects more viable. So for infrastructure, for example, NAPFID has now said that there is partial credit enhancement available, opens up the whole pensions and the insurance sector money available. Now let's make the projects more viable. So I think corporate credit will be driven by what are more viable projects.
We need an efficient market for corporate control. We should facilitate greater merger and acquisition so that our corporates become more efficient. And you can't do that unless funding is available. And we had extraordinarily constrained funding because the largest provider of credit were kept outside of it. So I'm saying this is an excellent step. Obviously, we'll have to wait for the detailed guidelines on this. But I think this is a very, very good step. That time there was systemic concern about NPAs and so on. And it was believed that you can take away these large borrowers from banking sector and move them to bond markets, for example. I think what we have probably realized is bond market, while has grown, it's very skewed.
All right, that's about the banking space and a slew of reforms. But even select pharma stocks rallied in trade after Trump's administration struck a deal with Pfizer to reduce prices for Medicaid patients in line with most favored nation pricing. Ekta Batra is here with the details and the stocks that tend to get impacted because of that. Ekta?
Well, yes, the news overnight is that Pfizer has signed a deal with the Trump administration, so they will be reducing prices for Medicaid patients in line with the most favored nation pricing policy and also offering steep discounts to patients while they sell directly. In lieu of this, Pfizer will get a 3-year relief from tariffs. The impact is a positive read-through for Indian pharma companies. Sun Pharma, for example, is in focus as it has a specialty portfolio or a branded portfolio which comprises of around 19% of their sales. Citi, in fact, has written on this. They have a buy and a target price of 2180. According to them, the most favored nation pricing overhang is removed with the Pfizer deal. Existing drug prices in Medicare and commercial segments haven't been touched, removing a key overhang on Sun Pharma's key drug, Ilumya, from their specialty portfolio. Additionally, besides Sun Pharma, the other CDMO companies seem to be rejoicing a bit in today's trading session as well. There is relief for CDMO players if in case formulation companies now do not have to redirect capital towards US capacity, hence reducing the threat of offshore outsourcing eventually being under the scanner as well.
Ekta, thank you for that. Sudeep, you take this rally within the pharma names with a pinch of salt, or do you believe that, okay, there is some relief forthcoming for them now?
Well, I will take it with a pinch of salt. I think, things are too volatile at this stage. And I'm more worried about the CDMO players because, they don't get directly impacted, but secondary or tertiary impact may come on CDMO players as well, because people may start moving, these activities to US to show investment in US, and these players may not get incremental business and incremental contracts. So I'm a little worried about this entire CDMO space, as well as, of course, the guys having patented drugs. Of course, there can be way outs and there can be via media of handling things for the time being, but it's too volatile a scenario. I rather focus on pharma companies focused on domestic market and non-US markets.
All right, take that point. That's about the pharma space. Let's also quickly take a look at what's happening in autos, because Nifty Auto was in the fast lane. We got the September auto sales numbers. And if we start with the big players, for instance, Tata Motors surged in trade today. Most of them have reported numbers which were better than what the street was working with. Tata Motors at 94,681, Nomura estimates at 80,500. Total sales were up 12.3%, and it was led by the PV business. So passenger vehicles, that's where they saw growth of 47%. The CV sales, they were decent growth. 16% higher on that one. Tata Motors was one of the big gainers in trade today. Bajaj Auto total sales at 5.1 lakh units, which compares with Nomura estimates of around 5 lakh units. Total sales were up 9%. Total domestic sales were up 4%. But this was led by exports for Bajaj Auto, which was up around 18%. For M&M, both autos and tractor sales did well. Total sales in the auto space came in at 1 lakh units, which is a growth of 16%. Their tractor sales were very high, 49%, which was higher than the estimates as well. So the estimates that Nomura had was of around 50,000 units. I think tractor business did well across the industry. For instance, Escorts Kubota tractor sales were up 48% on a YOY basis to come in at 18,267 units. If we talk about Hyundai, even they did really well. Units sold were 70,347, higher than the poll. And some of the categories saw highest ever sales in the month of September as well. VST tillers, where total sales were up 35%. So a lot of these agricultural related sales, they did really well, and that is something that showed in the stock price as well.
Yeah, even Escorts and M&M tractor sales were really robust as well. Ruchit, on the charts though, Tata Motors is one that I wanted to ask you about. 5% higher today, crossing levels of 700 again. Do you believe that there is some more upside left here?
Yes, certainly it seems. Firstly, if you look at the sectoral index, then definitely the sectoral index, Nifty Auto Index itself is in an uptrend. And after some consolidation, it seems that the index should resume its positive momentum now. And Tata Motors so far has been a laggard, but today's price volume action seems quite positive. The stock has ended above its 200-day exponential moving average, and that too with very high volumes compared to its daily average. So I think at least in the near term, it leaves a room to rally towards 750 kind of levels over next few trading sessions. So price volume action looks positive. So 750 can be anticipated from current levels in next few days.
All right. And Sudeep, any word on the auto space?
Well, I do like M&M, and we have been liking M&M for quite some time, and I will continue to recommend M&M. I think the numbers, as far as tractor sales are concerned, we were expecting that, from the second quarter, third quarter, things will start improving, and that's what has started happening. As far as other automobile companies are concerned, Maruti is what we like. I think the lower end of the market, they were losing out for quite some time. I think things have turned now, and there has been amazing amount of demand, which the company talked about. And I think, this is going to be the beginning of a rejuvenation for Maruti. So from a long-term investment point of view, Maruti does look good.
Sudeep, Ruchit, thank you so much for sparing time and joining us today with your views on specific stocks. Take a short break. On the other side, we get you some top corporate voices and, of course, the key events to watch out for on the other side. Stay tuned.
Welcome back. You're still tuned into Markets Forward. Let's take a look at the big corporate voices of the day. JN Resources made a strong debut on Dalal Street. The company's management told CNBC-TV18 that it was sitting on 20% of free capacity, which can be used for growth. They also added that while it did not export to the USA, its focus remained on Southeast Asian markets. The company has been growing at 30% and expects to maintain this momentum going forward as well. They also said that margins would improve as operating leverage plays out.
Mahindra & Mahindra up next as the company saw a 10% rise in its utility vehicle sales and an 18% growth in its CV sales. It also saw a 60% surge during the first 9 days of Navratri. Pent-up demand and GST benefits have strengthened the market sentiment. Now, the company said that it is working to boost dispatches through rail and logistic channels. The upcoming wedding season is also expected to further drive demand. The sales are evenly split between the rural and urban markets, with Bolero and Bolero Neo leading in the rural areas, while electric vehicle bookings have increased to about 8%.
And last week, we spoke to LG's management. They told us that Diwali was the right time to launch an initial public offering. Remember, it comes up next week. While the firm's focus remains on the performance of its Indian subsidiary, LG also stated that reinvestments will be made in India as part of its third plant being inaugurated in the city. Production on the first line of this new plant is expected to commence by end of 2026. The company is doubling down on its capabilities while investing in new technology. The company added that scaling up the B2B business is a key priority. With all components being produced in-house, air conditioners are expected to drive business margins. They also noted that the decision to shut down its mobile business in 2021 was a global move aimed at focusing on the company's core strengths.
Now, Nilesh Shah, the managing director at Kotak Mahindra AMC, says that a barrage of IPOs has raised concerns over the quality and hence has not applied for any recent ones. Listen in.
With the barrage of IPOs, undoubtedly, there is no worry on the quality side. SEBI has done a fantastic job on ensuring that only quality IPOs come. Institutional investors also have done a reasonably good job in ensuring that they invest in reasonably valued IPOs. Many of the IPOs which have opened at a discount had virtually no institutional participation. So my recommendation to investors, please don't make mistake on your own. Learn from our experience and go for those IPOs where you believe there is a reasonable institutional participation.
All right, with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side of the short break.